Hi guys. Usually takes longer for StreamYard to get going. Hello. Long time no see. Just making sure we're actually live because if you've been here before with me, this is always like okay. Looks like we are. Let me see if I can hear us. That was not in my ears. We're good. All right. Welcome. Let's move you over here. If you're like, why are you wearing glasses, Brie? I always try not to have my glasses on when I teach you guys or when I'm here with you guys because I don't like the reflection. However, I am not feeling great. I'm faking it until I make it today. So that's where I'm at. So sorry about the glasses. Sorry about the glare. I'm sure I will take them off because they will bother me. But for now, when my head hurts, got to wear the glasses. So welcome. Today we're talking about S Corps. But first, I want to really briefly tell you, in case you are new to this area or new to this community, who I am. I am Brie Beers. I am a CPA. I'm a certified tax coach. I'm an advanced tax strategist, a fractional CFO. I have a lot of titles, but all that stuff means that I've passed some tests or I have taken some courses. Where I really hang my hat is on I'm going to say 20 plus years in accounting. I don't know how many for real, but 20 plus years in accounting and over 12 seasons. This is my 12th. Actually, I don't think it's even my 12th anymore. I think we're about to start my 14th season, tax season. But anyway, tons of tax seasons under my belt. I am also, what makes me a little unique is I'm also a business owner. I'm not just an accountant. I'm also an entrepreneur like all of you. And I've been a business owner for 7, almost 8 years now. And of those 7 or 8 years, over the last 6, I have really been focused on learning our tax code and figuring out how this tax code can actually help my clients who are not Jeff Bezos and Elon Musk and all the super rich people that we hear about taking advantage of our tax code, right? What I have really learned is that while we believe the tax code is for the rich, that is mostly because they have the resources and the people to take advantage of all the loopholes that are in this tax code. When all is said and done, guys, the tax code is built for business owners. All right. So if you have a business, you can take advantage of the rules that are in place. All right. My mission here in what I'm doing is that I believe that tax strategy and tax planning can be the first step to us as the working middle class building wealth. Because what it is even if you do not make any more dollars in your business this year, right? If we can do some tax strategy and some tax planning, save some money on taxes, it's like giving yourself a raise, right? Without actually doing any more of that extra work to bring in that revenue. All right, so that's why I show up here for you guys every week. Not the last 2 weeks. We had a holiday. I had a retreat I was on, but I'm back. One quick housekeeping. Next week, we are doing a Q&A session. So I highly encourage you guys to come show up live. How I handle these is I do all my live questions first that are in the chat. Those are always the ones that I answer first. We will start with this BOI. We will address this business ownership information reporting that's going on. Right now it's on hold. If you're like, wait, what is this? Keep an eye on it. BOI reporting. It's not a thing right now. It's something that was supposed to be new in 2024. 2 weeks ago, 1 week ago, last week, they put it on hold. The biggest question I get on that is, it's a Texas court that put it on hold, but the whole country is on hold. So right now you do not have to report your BOI. Next week, we will talk about that. We'll start with that, and then we'll jump into Q&A, starting with the people that are here live. Second best way, if you know you can't make it live or you're not sure, is get on Facebook and DM me. All right, my assistant is going to take all those questions that get sent and send them to me so that I can address them. All right, let's get into today. Today we're talking about S Corps. What I want to start with is, even if you are not an S Corp, you are in the right place. All right, I do got to lose the glasses. I can't. If you are an S Corp owner and you're not really sure what that means, I get a ton of clients that are like, yeah, my accountant set me up as an S Corp, but what does that mean? Am I supposed to be doing stuff? You're in the right place. If you are not an S Corp, but you hear about it, right? You're like, my business friend, TikTok, Instagram tells me I should make an S Corp election, but I don't know what that means. You're in the right place. We're going to answer all those questions. If you have questions, put them in the chat. I'm pretty good. I've given this little talk enough times. I'm pretty good at hitting all the high points, but if you have questions, let me know. All right. So the first thing is to get some water because I start talking too fast. and I can't breathe. The first thing we need to talk about is the legal structure of your business versus the tax structure of your business. All right. So the legal structure of your business can be tons of things, like dozens of ways you can set up your business legally, right? From being an independent contractor working under your social security number to being a sole proprietor, a single member LLC, partnership, corporation, tons of ways that you can set up your business legally. Okay. There are only 4 tax structures. So all the legal structures fall into one of these buckets. All right. And the first 3, I did not put makeup on and I am regretting it. I'm sorry, guys. Ugh. That's what happens when you don't feel good. So 4 buckets, 4 tax structures. Okay. But 3 default structures. Okay. So that's what I'm going to start with, because we've got to start at the bottom and build that knowledge. So if you're in business by yourself, you are the only owner of your business. It is just you. It does not matter if you're an independent contractor, a sole proprietor, an LLC, whatever. You are a Schedule C business, right? You report your business income on Schedule C. All right. If you're in rentals, then you would do a Schedule E, but we don't really ever recommend S Corps for real estate investors. And we can talk about that if there's any of you on here. But Schedule C is all of you that just are by yourself. It's your business. You are the only owner. You report your business income on Schedule C of your personal tax return, right? You do not have a separate tax return for your business. Okay, so Schedule C is the default for anyone who is just by themselves in business. Okay, partnership is the default for anyone that is 2 or more. So if you go into business with one of your friends or 10 of your friends, all right, your partnership is going to default to just a regular partnership, and you're going to file a separate tax return it's called a 1065. All right, so the partnership is the default for anyone that has any business that has 2 or more owners. Corporation, this is a legal structure. You decide when you set up your entity legally to be a corporation. Okay, so if you have Inc., Corp, anything in your name, check a box with your Secretary of State that says, yes, I want to be a corporation, then that's your default. You're going to file it in 1120. It's a separate return. C Corps are a totally different beast. I don't think there's many of you, if any of you in here, that are C Corp owners. So I don't want to say we're going to ignore it, but we're going to kind of ignore it. Okay. So the 4th tax structure is your S Corp or your S Corporation. All right. This is not a default. The S Corporation is a tax election that you must make. Okay. So you are going to be any sort of legal structure taxed as an S Corp. All right. So that's what we're going to talk about today. Like, what is that S Corp? What does that mean? And do I want it? Okay. So we're starting with, why is it beneficial? All right. And the reason, so the S Corp, a little nerding out for a second, the S Corp was created as a hybrid between a corporation and a flow-through entity, okay, like a partnership or an LLC, okay? And what they wanted to do was kind of take the best of both worlds and create this election that small business owners could take advantage of so that they could get some tax breaks, all right? So the S Corp is beneficial. The biggest benefit of this is from what we call the self-employment tax. So let me give an example. So it doesn't matter if you're a partnership or it's you, Schedule C, all right? But let's say you have all of your revenue, okay, all the money that comes into your business, minus all of your expenses, all the money that goes out of your business, you're left with your taxable income, all right? Taxable income, net income, profit, we kind of hear all these words thrown around. Taxable income is what we're going with today, all right? So on your Schedule C, that's the very bottom of your Schedule C, it says, okay, you had $75,000 in taxable income this year. All right. If you're in a partnership, there's 2 numbers you look at. There's the guaranteed payments that your business pays you if you have them. And then there's box 1 of your K1 that says this is your share of ordinary income from the partnership. That box 1 treated the exact same as the last line on your Schedule C. That's your business income. All right. So let's say yours is $75,000. Okay. That $75,000 is going to be taxed by you personally because it's either on Schedule C if you're by yourself, or it's reported on what's called a K-1, which is given to you, and you report it on your personal 1040. Okay, so that $75,000 is going to be subject to your marginal tax rate. Right? That's what we all hear about, right? Like, I'm in this tax bracket, this is my income tax, all those things, right? That's the one, starts at 10, I think it goes 10, 12, I think there's a 15 in there, 22, 24, those are the most common for Americans. 22 is the most common. 24 is the most common for tax preparers or taxpayers with a tax preparer. Weird stats, I know. 24, 28, 32, 37. 37 is our highest. Doesn't matter. All right. That's your, so that is your marginal income tax bracket. Okay. And then that number is also subject to state income tax if you're in a state with income tax. But where the S Corp is, so where, if I lost you, come back, where the S Corp comes in is the self-employment tax. Okay, so you pay your marginal tax rate plus 15.2% self-employment tax. All right, so I gave a $75,000 example. Let's go with 100 because I like round numbers that are easy for me to calculate in my head. So if you have $100,000 of income from your business, be it a Schedule C or from your partnership, that $100,000 is subject to your federal income tax, it's subject to your state income tax, and it's subject to the self-employment tax of 15.2%. So you are paying on top of your income tax $15,200 in self-employment tax. All right, you with me? Cool. So where the S Corp comes in is you can make an S Corp election. One of the requirements of an S Corp is you have to pay yourself a reasonable salary. Okay. Reason for this is the government still wants their payroll taxes. They want their FICA, their Medicare, their Social Security. When you're a Schedule C or a partnership, that's self-employment tax. When you're an employee, whether it's an employee with someone else or an employee within your own S Corp, you receive a W-2 for the wages, right? So when you receive that W-2, think about it. We've all been W-2 employees, right? Whether we are now or not, we've all been W-2 employees. You see, we pay, as employees, we pay 8%. Yeah, that's right, 7.85% in FICA, Social Security, Medicare. Our employer pays the other half, right? It just comes out of our paycheck. We never see it. We don't have to worry about submitting it. Our employer does it for it. Great. We're no longer there, right? So when you're an S Corp, you have to pay yourself a reasonable salary, which we're not getting into today. But if you are a client of ours, it's something we offer. Even if you're not a client of ours, we can do that for you for a fee. But you want to make sure your S Corp is paying you, as someone who works in your business, a reasonable salary. So let's go back to that example. You have, let's call it an LLC, with $100,000 in taxable income. We now convert to an S Corp. All right, we convert to an S Corp. We do a reasonable comp analysis, and we determine that $50,000 is a reasonable compensation for what you do in your business. Again, easy numbers. All right. So then what happens? You're still going to have $100,000 of income taxed, subject to income tax. All right. That's not going to change. What's going to change is that self-employment tax piece, because now, instead of paying 15.2% on the full $100,000 that we did in the first scenario, we now run a payroll. So the S Corp pays, so Bree Beer's CPA pays Bree Beer's a $50,000 salary, issues the W-2, deals with all the payroll tax, all that stuff. Okay. So now between Bree Beer's CPA and Bree Beer's, we are paying 15.2% on only $50,000 because that's what my wages are. All right. So we just cut our self-employment tax in half. All right. Does that make sense? I'm going to peek in the questions. Okay, good. Let me know if that does not make sense. I'm going to say it one more time. $100,000 of income from a Schedule C or from a K-1 from a partnership, at $100,000 subject to income tax plus 15.2 self-employment tax, that's $15,200. As an S Corp, I'm not going to tell you cut it in half because everyone's business income is different. Everyone's reasonable compensation calculation is different. But in this scenario, our reasonable compensation is $50,000. Therefore, we've cut that $15,200 self-employment tax from scenario 1 into $7,800.
in number 2, in scenario 2. So we cut it in half. We cut over $7,000 in taxes. All right. That is the whole reason that people make the S Corp election, that tax accountants suggest the S Corp election. And so the next question is, should I, right? So we'll get to that. Should I be an S Corp? We will circle back around to that. So number one reason S Corp election is made is to save on self-employment tax. A little bonus side, you guys, business returns are less audited than personal returns. So when you think about when you're a sole prop, your Schedule C on your 1040, there is a slightly higher chance that you will get audited than if you have a business return. Don't get scared though, still 0.01% of returns actually get audited. All right. So, but that is like kind of a little bonus, is you're less likely to get audited as being taxed as an S Corp versus a Schedule C business, but not versus a partnership. All right. So what are the downsides? And not necessarily the downsides, but what are the things to consider? Like, yes, I would love to save money on taxes. Okay. Yes, please. That sounds great. But this is the stuff that a lot of accountants do not advise on, right? They show you the savings. They, they jingle the pretty bell in front of you, but they don't tell you, okay, but these are the things you have to also consider. Okay. Usually they're not deal breakers, but it's more of you need to know what you signed up for, right? So great, I'm getting that tax break. What do I have to do in return, right? So first of all, if you're currently a Schedule C and you make the S Corp election, you now have a separate return to file. Okay, so there is going to be an extra tax prep fee. It's no longer included in your personal. Your personal return prep should go down because you no longer have that Schedule C, but you're going to have that extra tax return, and it's likely not going to balance out perfectly. You're likely going to pay more in tax prep fees when you now have that new return to do, right? You have to run payroll. If you do not, if you already have employees, not a big deal. You just add yourself to the payroll, right? But if you don't have employees, you now have the added expense of running payroll. Okay, you have to run payroll for yourself. It's a requirement of the S Corp election. Right, and a few additional ongoing legal requirements, like when it comes to the operations, you are supposed to have a board of directors, annual meetings, you're supposed to record keep these things, all things that can be done with boilerplate templates. Okay, nothing complicated, but the point is you should have that documentation to support the fact that you are an S Corp. All right, another thing to consider, there are some states that have corporate taxes. For example, the biggest California has an $800 minimum franchise tax. Texas, I think, might have one. I can't remember off the top of my head. Tennessee has it. Different states have some corporate taxes that you're going to have to pay if you're an S Corp. So something to weigh in your decision, right? And then there are rules. Not everybody can make an S Corp election. All right. If your business, it's limited, which most of these are not going to apply to us. Okay. I know this group, I know my following, but I want to tell you. So the rules: can't have more than 100 shareholders, which is why that's what a corporation is for. C Corps are for those that want to get that money and have tons and tons of owners. All right. Issue stock. So S Corps can't have more than 100 shareholders. The shareholders must be U.S. citizens or residents. Okay, so that can be a deal breaker for some businesses. S Corps can't be owned by corporations, partnerships, or most trusts. So S Corp owners have to be U.S. citizens or residents, and only one type of stock is allowed. So you can't have preferred stock and common stock. So again, not rules that apply to most of us here, but just something I want you to know about. Okay, so how? Right? Do I want it? So 2 more questions to ask. Do I want to make this? And then how do I do it? So the first of all is this the right fit for me? I cannot tell you that. Every business is different. But being that the main benefit is that tax break, right? The 15.2% in income, in self-employment tax. That's the biggest benefit of making that S Corp election. Okay. So you have to figure out what that looks like. What is that savings? So you need to know, what is my business net income for the year? All right. Or what is it going to be? What do I anticipate it to be? If I'm looking into 2025, what do I anticipate my 2025 net income to be? And figuring out what your reasonable salary is. All right. That is something your accountant may or may not do for you, either included in your services or for a fee. It may be something, there's a software called Reasonable RC Reports. They do a reasonable comp study for you for a fee. We will do a RC or a reasonable comp report for you if you're our client. But the thing is, you have to figure out what that reasonable comp number is, right? Because if your business is making 50,000 net income, but you do a reasonable compensation, and your reasonable compensation for what you do in your business is 80,000, right? Not beneficial yet. But knowing that reasonable comp number is that's your guide. Okay. So I always recommend to people if you're close, if you're in that 50 to 100,000 net income range, get a reasonable comp study done. Okay. Because then you'll know because you have to be above and beyond that reasonable comp to get the tax benefit. Okay. The other thing, remember to consider, is that you now have an extra tax return prep fee. You have to run payroll if you're not already for current employees. So a couple added expenses, right? So weighing that. So that is my blanket advice is figure out what that reason. If you're in the 50 to 100, if you're over 100,000, you should absolutely be having this conversation with your accountant. Okay. If you're over the $100,000 net income, right? Taxable income from your business, conversation should be had. If you're in the 50, I would almost say at this point, probably more like the 70 or 80 to $100,000 range, just with the cost of living, right? Going up and wages going up. But we've always said 50 to 100, have that reasonable comp study done so you know the number you're looking at. All right. And if your reasonable comp is 60,000, 70,000, 80,000, whatever that reasonable comp number is for you, that's like your threshold. Okay. That's the number you're like, okay, if I'm not above that, this is not even a conversation. Okay. Once I'm above that, we need to reevaluate. All right. And then the next thing is, okay, how do you do that? Super easy. It's a form 2553. All right. Your accountant can file it with, so it's due by March 15th of the year you want to elect. So if you're deciding for 2025, yes, I've done the numbers. This is what I want to do. You want to get that form filed by March 15th. There are exceptions for late filing, which I want to make, we can make exceptions. Okay. Not we, the IRS will make exceptions if you follow some certain rules. Reason I tell you is because a lot of times people have better years than they planned, right? And so if next June, July comes and you're like, holy crap, this year is huge. I'm doing great. I'm on the up and up. I plan on having this, seeing this growth. I should probably look at that S Corp thing again. Do it. You can backdate it you have to do certain things. You have to include certain lingo in your 2553 filing, something your accountant can do for you for sure. Maybe your attorney, I don't know. But yeah, you can do it. All right. That's my big takeaway from today. All right. So again, next week, let me make sure I don't have questions. Okay, good. No questions. I didn't think I would. I've done this enough. I didn't think I'd have questions, but next week, Q&A. All right, we're going to start the day with addressing BOI, wherever it is at next week. I'm assuming it's going to be in the same place, but we'll talk about it next week. We'll talk about what you need to do between now and the end of the year to keep an eye on it. And then we'll go into Q&A. I'll start with those of you that are here live. I will answer your questions from the chat. And then I will go into our bank of questions, which I already have some very commonly asked questions. But the best way to get into that, if you know you can't make it live or you're not sure you can make it live next week, is to go to Facebook and message me. Okay, my assistant will grab all those questions that you guys message us and compile them for me so I can answer them next week. And that will be our last live of this year. All right. Our firm pieces out for 2 weeks. We are closed for the week of Christmas and the week of New Year's. So we will be back that first full week in January. So, all right, you guys, have a great one. I will see you next week. All right. Have a good rest of your week and good weekend.